Thanks, Poonam, for that. Let's take this conversation forward with Urmil Shah, who, of course, is from IDBI Capital and tracks the IT space pretty closely. Urmil, let's start with, why this sort of a reaction? You think it's a surprise which has come in, which has led to the re-rating of HCL Tech? And why, if HCL Tech, is giving a good guidance, or they are, seeing 1-2% extra growth than what they had earlier seen, why are other mid-cap IT names going up? Can you just put things in context?
Sure. So I'll first speak on HCL Tech. So clearly we have to keep in mind that, HCL Tech had earlier given a guidance, one of the few companies who had given the guidance at the end of Q1. It wasn't expected that immediately in second quarter there would be improvement in the business momentum versus what they had guided for. So to that extent, I believe that there is a positive surprise. Clearly, even for us, there is a positive surprise both on, the revenue growth point of view, because we had factored 2.3% QOQ growth for the second quarter, as well as EBIT margin upwards of 20.5%. That is also higher than what we had factored in. So there is a dual beat versus expectation. And my read-through would be that this means that their outlook regarding the CQGR for the second half remains. And with second quarter seeing a better than expected performance, the full year outlook should also improve. So we were expecting a 1.7% decline in revenue for the full year, but I won't be surprised that given that what commentary it is for the second quarter, they might actually end up reporting a positive growth for the full year. So I believe there was a dual surprise which came in and wasn't really expected at this point of time. So the timing is also a positive surprise. Now, coming to, the other mid-caps also doing well. So if we see, the stocks which are doing well, while the entire sector is buzzing, but there are few stocks which are seeing double-digit growth, that is Persistent Systems or Infosys. Now, both these companies, they have been doing relatively better compared to the peers since the last, 3 to 4 quarters. And even in Q1, they had continued to do relatively better than others, especially the first, as regards high quality stocks in the mid-cap space, both these companies do qualify to that. And even also they have been doing very well as compared to the other mid-cap peers. So I think it's a combination of these two factors because of which they're doing well.
Let's talk about Infosys as well. Of course, acquisition, considering the size of Infosys, is not pretty high. But, even other stocks are doing well, cheering positive news flow because there is growth. And in times of growth, even if you do acquisition, marginal upgrades do matter.
So, we believe that both, not just the acquisition announced today, Infosys, both the acquisition which have been announced recently, they are clearly for capability enhancement rather than, geographic growth or revenue growth. So I believe whenever there is a capability enhancement related acquisition that they have been done, there remains a strong opportunity to scale it up, given Infosys' strong client portfolio globally. So I believe both the acquisition are quite positive because they are for capability enhancement, though not having a meaningful impact on financials.
All right, Urmil, thanks so much for taking out time for us. Always good to get perspective from you. On that note, we are taking a break. That was a perspective on IT stocks. Of course, they are ruling the index today in terms of gains, whether you talk about the large ones, the mid ones, and HCL Tech, of course, which has given a news flow regarding how their quarter went so far.